All right. Good afternoon, everyone. Thank you so much for joining us for our next session in the Economic Relief for the Travel Industry webinar series. My name is Colleen Strimbu, and I am the CEO of TIMA, which is the Travel Industry Marketing Association. TIMA helps travel sellers from all verticals with sales planning, business development, and marketing efforts. And we also provide educational resources and updates with relevant topics in the market. Economic and business recovery are absolutely key right now to the travel industry. So we've been focusing on our partners who could really help you get that information for your business. Today, the Octave Hospitality team joins us again, and we'll be focusing on PPP updates, acceptable use of funds, loan forgiveness, and we've got a lot of time dedicated to answering your questions. They did review the questions you submitted when you registered and will do their best to address as many of them as possible during the webinar. However, you can feel free to post questions in the chat box as the webinar is going, and they will reference those as well. Also know that we will be posting the recording of this webinar tomorrow on the Octave Hospitality site and on the TIMA website, so you can review it again if you need to. With that, I would like to introduce the business and accounting professionals from Octave Hospitality who will be leading you through today's webinar: Jim Scott, Brian Romine, and Tony Price. Gentlemen, take it away.
Thank you, Colleen. Welcome everyone to the Octave Hospitality and Travel Industry Advisors webinar on the CARES Act and how it can be applied to the travel industry. I'm Jim Scott, and I'll be hosting today's webinar along with my fellow Octave advisors, Tony Price and Brian Romine. Now, normally, Octave advisors are working with our clients, giving financial, operational, and leadership guidance to make your businesses as efficient as possible. As you know, we're in unique times, and we felt it was important to try to be a resource during these uncertain days. Today is our third webinar on relief efforts. The prior two went into detail on how to apply for either EIDL loans and PPP loans. The EIDL loan is currently not accepting any more applications except for agriculture, while the PPP funds are still available but going fast. So if you have not applied for a PPP loan, do so quickly, and you can refer to either of our first two webinars for more details on how to do that. Today, what we want to do is give some updated news on the PPP program and other things going on, but then we want to focus on how to calculate what portion, if not all of your PPP loan can be forgiven. As always, feel free to ask questions during the presentation, and we'll do our best to answer them. With that, let's get going. First, just real quick, some of our services we offer in normal times. We help companies with marketing, distribution, leadership, workforce development, operational strategies, and revenue management. We still do that, but obviously right now is not the ideal time for people looking for some of those services, not that they can't be needed. Anyhow, we're going to get back into the CARES Act. And some of this we've gone over before, like I said, in our first two webinars with the COVID-19 loans and grants that are out there. PPP, if you don't know, stands for Paycheck Protection Program, and the EIDL loan, unfortunately, is currently out of money and not accepting applications. Now, there was one question that came in prior to or during your registration on the EIDL loans. Want to know that, or said they actually received, I believe it was $1,000 directly into their bank account. So that does mean you got it, but they hadn't heard anything more. Mm-hmm. And I can say in one of my other businesses, I had that happen also. And just last weekend, got that email to take the next step. So just hang in there. You should be getting that next follow-up email to take those next steps.
Yeah, I was just going to touch on that real quick. Just so everybody knows what to expect, like Jim, like you said, if you've received anywhere from $1,000 to $10,000 would have jumped into your bank account really with no explanation, no emails, no phone calls, nothing, just money shows up. That does mean you got into the EIDL program, and you will be receiving that email that it just comes out of nowhere and says, hey, you've qualified, and it gives you some loan specifics, and it just asks you if you want to move forward. When you do that, give it another 2 to 3 days and you'll see another email really with all of the loan outlined in a DocuSign link for you to go ahead and request the money. So whatever it tells you qualify for, you can apply for anywhere from $1 up to that maximum loan amount. And then once you put that in, and you hit submit, then you'll get back that request. So,
And if you did receive any of the advance, the $1,000 to $10,000, that would likely come from if you request the maximum loan amount, the loan would be reduced by what you received in advance. Is that your understanding, Tony?
well, that's what they said, but I think they actually did the calculation for you. So whatever they tell you your loan amount is, they took whatever you received into consideration before they told you.
Before they gave you the offer.
Yeah, because
Okay.
what came in our original email that I've seen is exactly what comes out in the loan amount. So, but if you guys end up getting those and you have questions on that, of course, you can reach out to us and let us know.
Just one real quick question. Once they've submitted, gotten that next email, pick their loan amount, and then hit submit, do we know the average turnaround? Is it a few days, a couple weeks?
Couple days.
Okay.
Yeah.
That's what we've seen so far.
So far, it's been 2 to 3 days. Now, as with anything, that is subject to change.
Right.
Well, and that's why I was wondering on the up to $10,000 advance. It appears right now that they're factoring that in, but by the time you actually get all the way to closing, I wonder if they might reduce your loan at that point based on what you received. So we don't know for sure. Things are changing every day.
Yeah.
So we're going to do our best to give you the information based on how we're seeing it and the way we're understanding it right now.
Yeah, and we did mention on the previous webinar what they're probably going to do is only give you a portion of that up front. So even though you may qualify for saying 60,000, chances are your first round of funding that hits your bank will only be about 20 grand. They're saying anywhere from 10 to 15 as your max. So doesn't mean you're not going to get it all. You just may not get it all right up front. Now that may change, but that's just kind of what they had said about a week or two ago.
Okay. One other quick question that came in. Have someone that applied did not get the $1,000 advance. Is it still being processed? And I can say that I had another company that did not get an advance through, but then the same email came through. So yes, that it's possible. Absolutely. May not be, depends on the timing. So it's not a guarantee when I say that, but there are companies that did not get an advance that still got through the process. So,
and we did see even late last week, several of the clients that we work with get the $1,000 to $3,000 advance still coming through.
Yeah, still
so it doesn't mean that you're still not going to get it. It appears they're still processing some of those. So if you haven't, hang in there. Maybe that'll come through.
And then one other question I see on EIDL that came in, the question was, is there any specific, like PPP has specifics that you need to use it towards for at least to be forgiven. Is there any restrictions on what it can be used for EIDL?
There is. It's just not near as restrictive as PPP. The PPP, again, as you mentioned earlier, Jim, it's paycheck protection. So 75% of that has to go towards payroll related costs, with the other 25% limited to rent, utilities, and interest on existing notes. The EIDL loan is, again, designed to be disaster recovery. And the way they kind of limit that is they're saying, look, you can't go out and build a new building, or you can't use it to move across country, or you can't go out and buy, $500,000 piece of equipment with it. But your normal operations, anything, whether that be, your rent and utilities like the other ones, but it could be just your business supplies, your repairs and maintenance, any of those types of expenses. They basically say that anything that would have been paid in normal operations, if it hadn't been for the disaster, then you can use the money for that.
Okay.
But the EIDL, if I recall, and correct me if I'm wrong, Tony, you're not supposed to use that for the exact same purposes as the PPP loan, correct?
Yeah, you're not supposed to duplicate it, correct. So if you end up getting money for both, you can't use it for the exact same, say, 8-week period of payroll.
Right.
So that otherwise you just lose the forgiveness piece under the PPP. So if you have those duplication, if you end up both with PPP and the EIDL, it's one of those things we've been advising people. We take a fresh look at everything and see where we stand and what makes the best use,
right?
Makes the most sense of usage.
But what I'm seeing right now, at least in the many cases that I'm, working on along with you guys, is the EIDL is going to come in towards the back end of when you need to use your PPP loan funds anyway. So it's probably somewhat unlikely you would have the opportunity to use it for the same expenses anyway.
Yeah,
Okay.
the good thing about it is you can, again, there's no, exact situation or duplicate situation. Everybody's fact patterns are really different.
Yeah.
But in a kind of an ideal world, what you're seeing is you got your PPP funds and you can use it for those next 8 weeks once you get it. But then your EIDL is there to kind of get you past those 8 weeks. So that would be your most optimum situation.
We got two more quick EIDL questions. One says, ask if you're getting, if you're on unemployment, can you get the EIDL loan?
Yes.
Okay. And then the other one, I'm not sure if this is referring to an EIDL or a PPP. It's not specific. I know it wouldn't go towards a PPP for forgiveness, but the question is, any provisions for debt relief on the business line of credit procured through another bank, non-SBA? I mean, the EIDL might be able to go towards that. I don't know, but
no, I think if the question is, are there any forgiveness or any right for other debt that you would incur?
it just sounds like, well, let me, just says any provisions for debt relief. So
yeah, that
like a line of credit already existing.
Yeah, I don't think you can. There's nothing really outlined right now that allows you, other than you can use the PPP funds and stuff to pay the interest, and then the EIDL funds you can actually use to pay that loan payment.
Right.
But as far as relief from it, there's really nothing out there yet.
Okay.
Well, one of the questions I've had related to that, Jim, is if somebody is getting a loan payment deferred and maybe they've had it deferred for 6 months, or for 6 months, and in month 4 or month 5 they get the EIDL loan, can they use that to catch up on the months that they've missed? So I've had that question, and I don't know the answer to that one. I wondered if that maybe was what the listener was asking.
Yeah, and just in the research, because of the same situation, again, this is preliminary because I don't know if we've really had these specific fact patterns in the past, but the understanding is, there's no limitation on making loan payments with EIDL funds. So one would assume that if you're behind or you've had something deferred and you need to catch up, and in a normal situation, those payments would be allowed, usage of funds, then making back payments for those should be fine.
You would think so. Yeah.
Okay. One housekeeping thing real quick. As you all type in questions, please do it under the Q&A and not the chat. That allows me not to have to toggle back and forth and miss questions. So there's another question on, do EIDL funds need to be repaid? Unless you got that initial amount that could have been considered a grant, then yes, they do need to be repaid.
Yeah.
That's a 30-year term. Yep. At 3.75% is what was advertised, and it's exactly what we're seeing so far.
So we haven't seen any of them different than that.
Correct. And it does not, the first payment does not need to happen for 12 months.
Correct.
Oh,
yep.
Yes.
Okay. All right. Let's move on from EIDL to the Payment Protection Program. We're going to touch on it briefly just to sort of recap, but once again, the detail, to get more detailed information on our first 2 webinars, which are on our website, go into a lot of detail and a lot of different scenarios. But Tony is going to do a quick recap to try to answer a few questions that you all might have.
Yeah, so on this slide that I have up, the only real key important thing is that there are funds still available. So we're getting that question now, does it make sense to go ahead and apply? And by all means, until they come back and tell you no, if you haven't applied, you should apply. So again, in those first 2 webinars, we went through a lot of detailed scenarios. The one that keeps coming up that seems to have the most questions are the sole proprietors. If you're an independent contractor and you don't really have an employees, do I qualify? And the answer is absolutely you do. The one thing that has become abundantly clear is the amount that you qualify for is completely and totally dependent on your 2019 Schedule C income. So won't get into a tax lecture here, but if you're filing your 2019 tax returns and you've already filed it, you should have a Schedule C, and whatever is on line 31 of that Schedule C, and I will share that real quick. So this gives you kind of a quick little scenario of what this may look like for you. Just again, you used $100,000 at the top, and then here would be some expenses, getting down to $52,000 of expenses with a net income of $48,000. This right here is the line you want to look for. So if you've prepared your 2019 tax returns, find Schedule C, look at line 31, and that is your number that you're going to use for calculations. Okay. Let me real quick get this back.
Just a quick note too, if you have not filed your 2019 tax returns yet, the banks are accepting draft Schedule Cs. So I would suggest and encourage anybody that hasn't totally filed to pull together a draft and to send that in with your application.
Correct. Yeah. So that is absolutely the requirement. So if you haven't done it yet, you will need to do a draft in order to qualify for that. Sorry, I'm having some slideshow issues here. The other thing I was going to mention too, just with this particular situation, if once you've kind of gone through and gotten your Schedule C, the thing that comes up a lot is when you do tax planning, of course, you're trying to maximize your tax deductions. Mm-hmm. So a lot of times you may end up with a tax loss or a very, very small number down there on that line. And unfortunately, if whatever that number is, if it's zero, you won't get any PPP funds, or you do not qualify for any of them. So just keep that in mind. So if, again, there was an example of it, that seems to be what's happening the most. So the other thing that, Brian, we might want to talk about too is, as it currently stands under the SBA guidance, the way the calculation works, if you qualified and you say if you got $10,000 for PPP funds
as a Schedule C,
Schedule C filer, currently only $7,500 of that $10,000 can be used to pay yourself. That's kind of the cap. The other $2,500 would need to be used for rent, utilities, and interest, and chances are you don't have that. You may, but chances are you don't. So what we've been kind of advising everybody is whatever you received, if you're a Schedule C and you don't have an actual office where you pay rent, then you should pretty much take 75% of that. Know you can use it
to pay yourself.
Yeah. The other 25%, you may want to just kind of tuck it away for now and wait and see what happens, because they could change. It's hard to say.
We're hoping they may adjust that rule or the way that guidance has been presented so far, but right now that is what it looks like. Okay, a couple questions along those lines. One of the questions was if they have higher payroll than the 75%, can it be used for that? Not necessarily and didn't designate whether it's sole proprietor. So I'm going to ask that question in general, aside from a sole proprietor, because I know you just answered that for a sole proprietor. But if it was more than that, because then the question went on to say, well, then can I pay myself more? So let's assume it's not a sole proprietor. What can they pay, use it for more than 75%?
Sure. Yeah. I was just actually working on one of these this morning where the company has W-2 employees. Even if the owner, if it's an S Corp as an example, and the owner is on payroll as well, the owner is still capped at $100,000 salary based on that 8-week period. So you're prorating that. So the owner is capped at that. Other than health insurance can be included as well from a group plan that can take the owner above that 100,000 prorated cap. So you can. So for the I'm getting lost here, Tony. What was the question again?
Well, I think a good general. It's so confusing.
So yes, you can use the more than 75% of the loan for payroll. So you can use 90% of it as long as you hit all of the right guidance there, where the owner's not, where nobody's above $100,000 on a prorated basis. And if you only have $10,000 of rent, utilities, and interest, and $90,000 of wages, qualifying wages, and your loan's $100,000, you can use 90% of it for payroll and end up with the whole amount forgiven.
Okay.
Yeah, I think the good rule of thumb, Jim, is if you have W-2 wages, you absolutely can go above the 75%.
Okay.
If you don't have W-2 wages, again, like a Schedule C, where you may be a single member LLC or just a sole proprietor, that's going to be capped at the 75%, again, unless they make changes.
Okay. Another quick question. Utilities. One of the questions was, does a telephone count as a utility? Telephone bill count as a utility?
Yes. So as long as you're taking the appropriate business percentage for the telephone, and we've seen that vary quite often, but if you're using a reasonable percent as business, or if you truly are renting an office and you have a dedicated business phone line, then yes. So your telephone, your electric, gas, things of those sorts, internet, that's specific for the business, all of those are included in utilities.
All right. One last question on PPP for right now. It's a two-part question. First, if an employee stayed working without pay, can we use the PPP for back pay? And then second, if an employee was targeted to make $80,000 a year, could we add another $20,000 and keep under the 100 as hazard pay?
The back pay question, absolutely.
Yes.
You can do that. You can catch somebody up. Can you repeat that about the hazard pay?
Hold on. I scrolled down.
Yep.
My bad.
Well, I think it was more or less just
second, if an employee was targeted to make $80,000 a year, can we add another $20,000 and keep it under the 100 and designate it as hazard pay?
Yeah, so that 100 is kind of a prorated number though. So we just want to make sure we understand that. But yeah, if you want to use that to kind of calculate the annual wage, sure.
Okay. Very good.
Yeah, and I don't believe you need to designate it as hazard pay. You're able to just increase the wages or the salary for that person to get it to that.
Yeah,
cap.
perfect scenario is we have a restaurant that we were working with that they had a lot of people who did not want to come back. So one of the situations they did is they actually gave everybody an increase. Now they know the increase was only for an 8 to 10 week period, but they did do that. They didn't really call it hazard pay, but they did increase everybody's wages. So, and that definitely qualifies.
So I do want to make one point on there that can potentially be a trap is the dollar amount of wages. Yes, that helps in getting you to that 75% number, but there is a separate calculation for maintaining full-time equivalents. So just by increasing the dollar amount to hit the 75% number doesn't mean that you aren't going to get caught by a reduction of what is considered full-time equivalent employees. So that's a trap to watch out for.
Gotcha. Okay. Now there's been a few questions on unemployment and PPP. Really, can I apply for it at the same time or have it at the same time? And the answer there is no, you can apply for both, but they have to be used at separate times. So you could have applied for unemployment right out of the chute and got on that. But then if you start using the PPP funds, then you have to, when you go back for your weekly unemployment updates, you have to claim that or report that. So then it would discontinue, and then you'd use that for 2 months. And then depending on the situation, you'd have to decide whether to go back to unemployment or not.
Correct. All
right. There's some good questions here, and I never know whether to pass them up or keep going. I think that's good for now. Let's keep rolling here. All right. So, Tony, do you want to continue with the PPP?
Yeah. So we talked a little bit about this on the last webinar, and so you've gotten the PPP funds. So now what? Again, we can touch on a couple of these things. I think we were on some of the questions. Does it make sense to bring employees back or leave on unemployment? Again, there's not a right or a wrong answer to that, and there's not a one size fits all answer. It really just depends on the facts and circumstances. We're really advising, unless you think you're going to keep the employees, unless you have work for them now, and you don't think they're going, or you think they're going to be needed after this 8-week period, then of course you should kind of strategize on how to bring them back. If you're having to make up work for them, and you're going to bring them back, turn around and have to let them go again in 8 weeks, then it probably doesn't make sense to. And then again, we talked about some of this as far as cash flow needs, depending on how you should use your PPP loan versus the EIDL loan. Right now, we're telling everybody, apply for what you get, or what you can get, and then you just have to kind of look at each situation. We don't know what tomorrow brings, so having all of these as resources is great. We have several situations. I'm working with a hotel right now that, they just got approved for their EIDL loan. They already had their PPP loans. Unfortunately, where they're located, they're just shut down. They're not even leasing any rooms. So the realistic possibility that they're going to use their PPP loans to be forgiven is pretty small. So what we're doing is saying, hey, they are going to use some of it. We're going to use those PPP loan funds to pay what we can with the plan that they're going to be forgiven, and then wait and see what happens at the end of that 8 weeks. Maybe we'll get lucky, and some of the things we're talking about that may change, and that which will then change how much of the PPP we'll use. But for now, the plan is to use as much as we can to be forgiven. Then they'll give that money back, and then we'll use the EIDL loan that they got approved for to move forward for the next however many months.
This is much better terms.
Yeah, exactly. And again, you don't have to worry about having to pay it back in 18 months because you got 30 years. So again, that's part of that strategy. But one of the biggest questions, and I think one of the reasons for today's webinar is forgiveness.
Right.
I mean, it's almost as clear as what, mud is the old saying. I mean, it's absolutely atrocious. I'm not gonna lie. They made it sound like it was going to be crystal clear that, oh yeah, you do this, that, and it's just magically forgiven. Well, that's not the case. So again, Brian, I know you're going to touch on it and just kind of walk through just some of the scenarios, I guess, and some of the issues with it. And you want me to share that spreadsheet?
Sure. Yeah.
Right now. So this should be good and confusing for everybody, right?
Yeah, this is nice and colorful, and it to some it might seem really cumbersome. Some it may seem somewhat straightforward, but it can vary so much between each business. It is a bit tough to kind of walk through, but this Excel template here, which we're going to have available on our website, if anybody wants to download and kind of walk it through. But just fair warning that it is, if you're not really up to date on this, it can be quite cumbersome to walk through and to get everything in the correct place. The idea is that each of the yellow cells are the input cells for all of the data for you. But it does take some consideration and discussion as well as you go through it. But this can help maybe help you determine how you're spending the funds, and then how much is estimated to be forgiven at the end based on your facts and circumstances. So just as an example at the top, the loan date on this one that we have plugged in here is April 30th. And so this will calculate out the next number of weeks beyond that April 30th date. You have 8 weeks to spend that $15,000 PPP loan that's right below that. And so you can key in your payroll week by week and other payroll costs that are qualifying. This one here, I set this one up as a Schedule C, where right there, where there's a $75,000 net income, again, from that line 31 that Tony had mentioned earlier. And so in this scenario, the forgivable payroll costs would calculate out to the $11,538, and that's 76% of that $15,000. So as Tony mentioned earlier, the max is 75%. So there's going to be a little bit of that based on current guidance that wouldn't be forgiven. Okay, and so this is step one, and then down in step two there, where you're looking at inputting your rent by week. That's typically going to be monthly, but you input your rent, you input your utilities. If you got an EIDL advance, you would include that as well, because that reduces the amount forgiven. And all of these get input, and then as you scroll further down, you're inputting then your there on line 32, Tony, if you're able to scroll a bit, then you're starting to input in your number of full-time equivalent employees for the 8-week period from the time you received the loan as the start. And I just plugged in one for each of those, assuming this was a Schedule C sole proprietor with no other employees. And but this is where, as an example, if you were an employer and you had 5 employees during the 8-week period, but during your testing period you had 10, you're going to have a 50% reduction in your forgivable amount. And that is another limitation in addition to the 75%. So there's a few other considerations in here, and at the bottom, you should get to a spot where you can estimate your total loan forgiveness there on line 54. We just, unfortunately, we don't have time to go through too many scenarios on this, and everybody's, again, facts and circumstances are so different. You might be able to get through this okay and feel pretty comfortable with it. And if that's the case, feel free to go out to the website and download it. And if you need assistance with it, there's options there to get in contact with us, and we can help walk through the calculation, or even help you further with not only the calculation, but in working with your bank and presenting the appropriate documents to them in order to try to get as much of this forgiven as possible.
Right. And we'll, and just in a little bit, we're going to go over how you can get that information from us and on our website. But prior to that, we got a few more updates and all we want to go into. And Tony, do you want to take the updates?
Sure. So again, that forgivable piece, I hate to feel like we kind of glossed over it, but it really is cumbersome. The thing to just kind of keep in mind that right now, as it stands, that 75% is still the threshold for payroll. And again, if you have a situation where you have less employees now than what you did, or you have less total payroll cost than what you did, chances are you have some type of limitation. So you really should make sure you know what that is before you get to the end of 8 weeks and realize it's not forgivable.
Right. It's good to know the amount, even if you choose to keep it and
Yep.
not give it back. It may make sense for you to keep that at the low rate, like Tony mentioned.
Yeah,
but it's good to know it.
Absolutely. But as far as some of the updates go, this is where we're I guess cautiously optimistic. I know we've participated in a lot of the associations, trade associations, with letters to Congress people within our own state, across the country. We've sent numerous requests, and some of the big ones. One of the biggest limitations that came out that would really made these PPP loans what we thought beneficial was Congress. We thought their intent was, hey, you're going to pay people, we're going to give you the money that's going to be forgiven, and you're going to get this benefit of, in essence, free money because your expenses for that payroll will still be deductible. Well, then the wonderful Internal Revenue Service came out a week or so ago and said, nope, if you didn't pay for it, which if you get money to pay those expenses, you don't have any basis in it, so therefore you can't take that deduction. Well, then that's just kind of a wash. That makes zero sense. I mean, you in essence just became the unemployment office for the government, and that was it.
Exactly right.
Well, I can tell you across the board, the Congress people that we've spoken to and from their offices, that was not their intent. But the IRS is the business. They're gonna
They have a budget.
Yep, they have a budget, so they're not gonna really just cave in on something like that until they're told not to. So, but as of yesterday, right, Brian?
Yesterday.
Yeah.
Right.
So it had been discussed back and forth as to go ahead and address that through legislation, and I'm not sure who initiated the bill, but it did get proposed. Now they're not in session yet until next week, right?
The Senate is, but the House isn't until next week.
Next week. So it at least has been thrown out there to fix that, to make sure that those things are still deductible, which then is a good situation for everybody. That's one of the big ones. But there's also Congress people, throwing about a lot of things. So we don't know what of this will stick. But one of the big complaints has been this altering of the 75-25 usage that we've been talking about. And when they decided to do this initially, the entire United States was not shut down. We were not in a quarantine. We were not mandated to kind of stay at home. So it kind of made sense. Well, now you got the 75%, threshold, and you got businesses who can't even be open. So it's impossible to use it. So it makes no sense. So there's a big push to change that ratio to allow more of those funds to be used for other expenses. Now, we don't know what will happen with that, but that we're keeping an eye on that. The other thing is then maybe if in conjunction with that, if they don't do that, and again, in conjunction with it, is to extend beyond this 8 weeks, because we've been in shutdown and businesses can't open. If the intent is to kind of pay people, maybe they should be on unemployment now, and then when we can reopen, say next month or 2 months from now, then be able to use the PPP funds for that purpose. So that's something, again, that's being discussed. There's also discussion on extra stimulus plan or payments. So a lot of people have gotten their $1,200. A lot of people have not. But they're already talking about an additional round of that. No idea what that will look like, other than it would probably be headaches for a lot of people like us. But
the one proposed bill that I saw was, again, $1,200 per individual, $500 per child, but capped at $6,000 per family.
Okay.
That was, the proposed amount for the next round if they get there.
Yeah. And we were going to talk real quickly on that because we've had a lot of questions. We get several probably calls, emails a day. Hey, I haven't got my check yet. Do you know why it's this amount and not this amount? Again, there's a lot of situations with that. You can go to their website. It does work most of the time, and plug in your information to find out what you would qualify for. There's been several people who found out there's some incorrect information, like they filed their tax return in last year and forgot to add a kid. So, they're like, hey, can you tell me why the IRS only says I have one kid? Well, you reported one kid last year. That's why. But the one good thing is this is really an advance of a 2020 credit. So when it is going to be a year from now, next April, when you file your 2020 tax return, it will correct any of that. So you'll file then if you didn't get what you should have gotten this year, or if for some reason it was based off of 19 and now 2020, you make less money and you're not phased out of it, you'll get that credit in 2020. So,
or even better, if you have a child in 2020, then that gets added on where they weren't on the 2019 tax return.
Yeah. And again, there's several things that are being thrown around. Some of them are true and some of them are not, depending on which news source you're listening to. But there is a lot of discussion. I have a feeling in the next 3 weeks, once some of these 8 weeks deadlines are starting to kind of come to pass, that you're going to see this bantered about a good bit, and hopefully some of this stuff will change, and we'll definitely keep everybody up to speed as much as we can. The only other thing we're talking about is just funding. The Federal Reserve has now started to push some of these backed loans. So what that really is doing is allowing banks to come up with some creative financing to help people that they know then will be either bought out by the Federal Reserve. So it limits their risk. Oh, here goes my computer acting up again. So it will reduce their risk, which means, they can actually come back and lend again. And then again, a lot of the businesses are coming out with various grants and other loans that are coming around. And again, that's one of those things that they come and go quick. So there's a couple of sites. I know Forbes is doing a pretty good job, but I should have put a link. We'll add that up to the Octave website as a couple of sources that are doing a pretty good job of tracking what the various state and some of the corporate, lending sources and grant sources are available.
Right.
So
one that's not on here, and that it may fall under that Federal Reserve backed loans, Tony, is the Main Street Lending Program.
Yeah.
Yeah. And that can be, if you're a fairly large company and struggling quite a bit, that one, it can be fairly large. It starts at $500,000 up to $25 million. And it's calculated based off of the average of your prior 3 or 5 years of what they call EBITDA, your earnings before interest, taxes, depreciation, and amortization. And you get to multiply that by 4 or multiply it by 6 under a different program to come up with your loan maximum. So that can be a fairly large amount. And, the interest rate is fairly reasonable. Right. It's variable. The repayment terms are a little bit cumbersome, a little bit tight, but it could be helpful. So Main Street Lending Program, anybody out there that maybe is a little bit of a larger company might want to check into that one.
Yep.
We had one question come in, and maybe this came out in the new updates and all, and I've not heard of it. Maybe you have. Somebody was asking if we were talking about the safe harbor that was released yesterday. Do you all know anything about that?
Which particular safe harbor? I guess that's the question.
It did not specify.
Yep, I'm not sure which safe harbor that would be.
So that I'm not sure that this is what they're talking about, but there was some concern with a number of the companies we were working with. There was a lot of press on the larger companies that took PPP loans, and they signed the certification that they needed the funds, but they had access to other sources of capital, or maybe didn't really need it, and they might get, pressed to actually pay that back. So the one safe harbor that I know about that was updated, if your loan amount for the PPP was less than $2 million, then you are deemed to have met the certification. So the thought process there is that anybody really that's getting under $2 million in loans are likely to have not had good access to other capital. Not always the case, but that's, I think, because of the SBA restrictions on their staff and their ability to audit everybody, along with the fact they want to help some of the smaller companies. They deem that you are certified, and they aren't. Doesn't appear they're going to come after you and really question that.
Okay, very good. All right, as we move on transition, Octave is here to help with recovery services and strategies. So we are working with some customers currently on planning going forward, whether that's cash flow management, value chain management, any strategic opportunities, and then just leadership and mindfulness to help with the stress and so forth going on with not only you as an owner, but your employees.
And if you're watching the slideshow, we are not helping with technical difficulties.
Yeah,
that is not something we do.
I will promise, though, I do have a new computer. This is because of a broken screen, so it has a mind of its own. I apologize.
So sorry about that. Now, how can we help right now, and specifically to the webinar that you're watching currently, with helping with figuring out what's forgiven? If you go to our website at octavehospitality.com, there's a store tab. And you can scroll down there, and we have 3 tiers. We have tier 1, which is a self-service thing, where the Excel spreadsheet that Brian had up earlier and went over, that you can plug in your numbers and come up with the calculations, is there and available for download. Then we have a second tier where you also get the spreadsheet, but then you can get a half hour of our one-on-one time through emails and so forth to help walk you through it or whatever assistance you need. And then the third tier, we can actually sit down and have a call with you, and then help you provide put together all the documents you need to give to your lender to prove that the amount of funds that would be forgiven under your PPP loan. So those are 3 options we can help you with right now in regards to forgiveness. So we'll open it up to see if there's any other questions at this time. We had a few questions come in. They were kind of repeats though. So I've gotten PPP loan, but I want to leave my employees on unemployment. Do I just give the money back? That's an option. That's up to you as far as your cash flow goes. You can certainly give it all back, but that's a choice you need to make in your business situation.
And we did have one scenario that we think makes the most sense is, there's no sense in giving it back at least until the end of the 8 weeks, because again, we don't know what the SBA is going to do. We don't know what legislation changes are going to come about. So the last thing we want you to do is to say, you know what, I haven't brought anybody back. I'm not going to have any of it forgiven, so I'm going to give it back now. And then all of a sudden, 3 weeks later, they change that, and you could have used that money, because once you give it back, you're giving it back. So even though you may not use it, I highly recommend that you hold on to it until at least you get to the end of your 8 weeks.
Well, and it's deferred for 6 months as well.
So the payment is.
The payment is, yeah. And so at 1% interest and no payments for 6 months, there certainly could be an argument to even hold on to it for that. I mean, you might be able to find a money market account to park it in and get 1.5% and cover your interest, and at least hold on to the funds until you can see how things shake out, just in case.
Okay, I just got this question in. It says, is this statement true? To the extent an employee earns in excess of $100,000, you may only include a maximum payroll amount of $15,385 per employee in your forgiveness amount determination. And he's got in parentheses by Intuit QuickBooks. However, if an employee is receiving back pay, they may be in the $29,000 range. What if the employee is not scheduled to make over $100,000? But with back pay, the total payout is near the $25,000. would the entire amount paid to the employee be included in the forgiveness application?
Yeah, the there's still some questions on this, I guess, back pay total.
Like a catch up.
Yeah, they've mentioned it, but there's been no specific SBA guidance unless it's happened in the last day or two that says that you can kind of add up all the back pay, and even though they haven't worked, and then pay it all right towards the end, and it still kind of qualify, even if it would exceed, in essence, the deemed 8-week average of 100,000
Right.
payroll.
So I'll go out on a limb here, which I do fairly often. And I'll say, I feel like what might happen with that is, as long as once you catch them up all the way to the end of the 8-week period, and let's just say that falls on June 30th, if you have caught them up and they are now in excess of $50,000 for the 6-month period for half the year, then they're over being on track for 100,000 for the year, then I think you might have some limitations. I'm hoping that's what the case is here. So it could allow for some catch up within your calculation, as long as the catch up doesn't put them over what would be a pro rata portion to get them to the $100,000 for whatever the day is that you end.
Right.
I have a feeling that's the way they're going to calculate that. Don't know for sure, but that would be what I would advise if I was helping somebody with a catch up.
Okay, great. Hopefully that helps answer his question. I did get a question on downloading the spreadsheet we mentioned. If you go to our website and go to the store tab, and granted, we just got this up today, so it does probably need to be refined a little bit as far as its wording, but go to the store and then scroll down under COVID-19 resources, and the download is tier 1. And it's $25 to download the spreadsheet, but it says tier 1. So we probably need to do the headers a little better, but that's where you would find it.
Yeah, and I would just suggest, if, try back again tomorrow if for some reason it's not working today.
It's functioning. It's not labeled real well.
Gotcha. Okay.
Okay, let's see. We had another quick question. Can we use PPP funds to pay an independent contractor a 1099?
Not and be forgiven. Yeah, they're pretty clear on that at this stage. There was confusion early on, but right now it's only payments that are truly compensation, and an independent contractor is not an employee. So,
okay. The next question is: the lender ultimately the one that approves the forgiveness, or do they send it to SBA for final approval?
The lender will initially, my understanding is the lender will initially be the entity that calculates and determines what your forgiveness is. There, I believe, is a chance that SBA will review that themselves and maybe make a different determination. I don't know how likely that is, but right now I do believe when we're sending all the information into the lender for them to make the decision based on their understanding and the procedures they put in place and what it is that they're asking for.
Yeah, I would concur. It's definitely going to go to the lender first.
Yeah.
I would think the only time that you would need to go to the SBA is if you disagree.
Okay. The next question is along those lines a little bit. What is the time frame to apply for forgiveness after the 8-week period?
Yeah, that's the part that still hasn't been 100% clarified. We don't know that literally on the last day of the 8-week period, if you don't contact the bank, are they going to, come after you? We don't know. I would just say that I would have a tickler on my calendar that says, a day or two at least before the 8 weeks that you're contacting them to make sure that you're not missing any kind of deadlines, but they haven't said for certain. I mean, I plan on having for all of our clients that we're working with is to make sure we're clear well before that last week, so that when we're going into it, it's just a matter of confirming with the bank as to exactly what format of the reports that they need. But
Yeah.
Right.
Okay. And that question reminded me of something too, just as a heads up to everyone out there. The timing of your payroll or the payments to yourself, if you're Schedule C, I think might matter. So when you get down to that last day or two on your 8-week period after you received your loan, if your if your actual cutting of payroll checks falls the day after that, you might want to consider running your payroll early and advancing it in there to if you're close to that 75% dollar amount. So just a tip that I think you might want to consider doing just in case.
Okay. Along those lines, and this is a follow-up question from a little bit earlier. In the 8 weeks, this gentleman knows that the funds that he needs to pay the funds to pay employees in the 8 weeks, but asked, does it have to be paid weekly or can they follow their normal pay cycles, which looks like in his case is the 15th and end of the month?
Yeah, I think again, you can follow your normal cycles, but if that last paycheck on the end of the month falls just outside of your 8-week period, you might want to run a special payroll because we don't know for sure. There's no guidance yet as to whether or not that's kind of an accrual basis payroll, and whether you've accrued 13 days of pay and you're paying the 14 days the next day. Can you include the 13 even though you didn't pay it? I don't know, but I'd just suggest going ahead and paying it a day early in that scenario.
Absolutely.
Yeah, logic would say that you should be able to include that, but we know we're dealing with the federal government.
Absolutely.
Logic sometimes doesn't apply. So, I mean, like Brian said, and unless we get any specific guidance prior to that, I would do the same thing and do like a short period payroll.
Okay. This is a follow-up question to something that was talked about earlier. So if someone isn't a sole proprietor, they can spend up to 90% on payroll. How is that number linked to W-2 wages?
Well, they actually can spend 100%, not just 90%.
That's right.
There's no limitation as long as they use it on payroll, and it's pretty
unless
much,
they're over the 100,000.
Yeah, unless they're over the 100,000. It's, I guess, kind of not really sure how to say how it compares or relates to W-2. Other than that is your compensation number. But it just depends on what box in W-2 you're referring to. And you're not going to have a W-2 to compare it to, but really anything that would be included in what would be deemed W-2 compensation would be in there, plus a few other things.
Right. So maybe the way to answer that might be, you can run a payroll summary report and see what's in your gross wages. And that's likely what's going to show up in box 1 of the W-2. Now, what may not be in box 1 of W-2 would be group health insurance that can be included as part of, quote, payroll costs for this purpose. And so if you have a group health plan for you and your employees, the employer paid portion can be added to those W-2 numbers, as well as like your unemployment, state unemployment insurance payments as well, can be added in there. And those are all payroll costs, retirement contributions as well that the company pays, not what's withheld from the employee's pay, but what the company pays as a company expense can be added as well.
Okay. Next question. Where is the paperwork to apply for forgiveness?
Your bank.
Yep.
So whoever you received your PPP loan through, you should contact them as you're nearing the end of your 8-week period, or very soon after, I think, and ask them for a list of the documentation for what they're going to want. I think they're going to want your payroll summary reports if you have a payroll system in place. If you're Schedule C, you're just writing a check to yourself as the owner, probably copies of canceled checks. If you're paying rent, I've seen where SBA is saying that you might want to request a copy of the lease agreement. So you may want to make sure you have a lease agreement in place and have copies of canceled checks. I don't know that the banks are going to require that from you. They're all going to be different. Some may just accept if you're using QuickBooks Online as an example, they might just accept the P&L for the 8-week period to show it. But I think they're going to ask for more in most cases.
I will say that one bank has already verified for one client what they want, and it was a payroll summary report from the payroll company. It was a copy of the lease agreement to verify their rent, which they actually asked for that as part of the application process, which was crazy, but they did. But that's what they want to have on file. And then any utility bills that we would pay, they need to have kind of a cancel check or a print from the bank, like the bank statement, because these are all done digitally. So there's no real check. So they wanted a printout of the statement and that expense highlighted. So again, I think like Brian said, it's going to vary, but I'd be prepared to support it
with that.
Right. And that's one of the things that we can, our tier 3, that we can help you with.
Exactly.
That's if you have difficulty with that. Along those same lines, a question just came in. What if I don't write myself payroll checks as a sole proprietor?
So I would suggest that you do. So if you got a loan in of $10,000 and you have 8 weeks to pay yourself, you may want to just pay yourself $5,000 at the end of week 4 and $5,000 at the end of, because you're going to have the cash in your bank account for it. I don't know that that would necessarily say that you wouldn't qualify for forgiveness, but I think as an abundance of caution to write yourself a check out of the business account to yourself for that amount to get you to where you're 75% of that PPP loan.
And I will say too, guys, the many situations where sole proprietors don't necessarily have a separate business checking account. And in that particular situation, we've said, hey, even take the bank account that you received the funds in and go ahead and write yourself a check and literally turn around and deposit it right back in. The only reason we say that is because we don't know how, I guess, over the top the banks are going to be. So again, I'm using that example. If you got a $10,000 deposit, I would write a check for $7,500, walk right to the bank and just deposit it back in there. And then at least you've identified, hey, I calculated 75% that I know is going to be forgivable, and that's been documented. And then you can deal with the other 25% closer to the end of your 8 weeks.
Yeah. Okay. Well, we're getting close to the end. I'm going to wrap up with 2 more questions. First one, it says, we are a C Corp, 7 employees. Our PPP start date was April 28th. We paid all employees the regular salary for April and wanted to verify if we can pay them 50% of normal salary for May pay on the May 29th and 50% balance in June for the June payment on June 21st.
Oh, well, we'd have to kind of walk through that calculation. I think I'd be a little reluctant to try to walk through the details of a specific PPP loan forgiveness calculation. There's just too many things that go into that. And that's certainly one of them, what the listeners asked there. And so we'd have to run that along with the other numbers and just to kind of get to a final good estimate of what we think is going to be forgiven. So Tony,
I would say generally speaking, I think you would be fine based off of the dates I heard. But again, I think until you do the other limiting calculations for full-time equivalents and things of that, I'd be a little nervous to say 100% for sure. But I think generally speaking, you're fine.
Okay. And then the last one for this round, it says, my landlord waived my rent for 2 months, which will make it difficult to spend the 25%. I just want to clarify, I can use 90% for salaries. Is accountant fees considered utilities?
We wish.
We like to say they're essential, but not necessarily utilities. But yeah, and again, that 90% I think was just an example. It's 100% if it's truly W-2 compensation. But if you're a sole proprietor, then of course it's that tax cap of 75%. But
so was that, did I hear that right? Was the rent waived or deferred?
Well, it says waived, and,
Okay.
and I don't know. I was going to ask the same thing. As if it's deferred, you could
catch it up
and count it that way.
Right.
Yeah, that's one of the things that we've actually had this discussion is there's many situations where it's going to be deferred. But if a bank is going to ask for the lease, then we would argue that you're still on the hook for paying that, and you're going to use it to pay that. Just because the landlord has given you the ability to defer it doesn't mean it's not due and you're not going to pay it. But again, we don't know for sure what they're going to ask for, so it's kind of hard to say exactly.
Yeah, I think you're right. They may allow for that, and that's I think a good argument. In the end, I think when it comes to the forgiveness piece, we've seen it 1,000 times. It'll depend on the person you're working with at the bank and what their interpretation is.
Yeah, I would say your banker is going to be, or whoever you've dealt with is going to be the biggest person in your way. Because let's be honest, they've already said the threshold for the SBA to review anything is kind of $2 million. So I'm not advising anybody to do anything wrong, because we've already seen the news where a couple of people have been arrested for falsely filing these things. But to the extent that you get it through, I don't think you have to worry about somebody questioning you after the fact. So
Yeah, just do what's reasonable and
Right.
Okay, very good.
All right. Well, I want to, do you need to conclude, Jim? I'm so sorry.
Now, I've got one more thing to go over, Colleen, is we are getting ready to launch a couple peer panels. We've been out talking a good bit, but we want to hear from people in the industry. So we're doing 3 different verticals: tour operators, travel advisors, and hoteliers. And stay tuned for dates and times that we're going to do these webinars where we have some experts of your peers on a panel, and then we're going to walk through or moderate a discussion on that, see what they're experiencing, how they're dealing with different situations, and then obviously open it up for questions from the audience. And particularly, we're going to focus on knowing your numbers, cash flow, management, that type of stuff, and also stress management and how that's being handled. So we're going to do that, like I said, for tour operators, one vertical, travel advisors, another vertical, and hoteliers. And that's going to be coming up in the next few weeks. So keep an eye out for that in your email box.
Great. Great. And if anybody's interested in participating in that as well, please shoot an email over to info@octavehospitality.com. We'd love to hear from you as well on what your circumstances, and if we can get you in, we definitely will for that. Thank you guys so much for your time today. And thank you everybody for participating and joining in. You'll be able to find a copy of the webinar on tima.travel tomorrow, as well as octavehospitality.com. We sure appreciate your time, and keep an eye out for the next series of webinars. Have a great afternoon, everyone.